David, what I didn't like about it, that's what all the car companies would have said. And I would have thought there was no wizardry to the quarter.
Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So as we know, Tesla reported earnings just over 1 week ago and blew expectations away. Funnily enough, totally shockingly, the stock went down after this incredible quarter, at least for a couple of days. Suddenly, however, we've now seen Tesla stock move up over 10% from the very recent low. It's almost as if the stock market's a little bit slow to figure out what exactly happened in the quarter. Now, I don't want to come across as particularly condescending here, but I will be brutally honest with you guys. I personally think, based on a hunch, which is not very scientific, but it's all I've got to go on. Most of the Wall Street stock analysts covering Tesla are not as smart as they'd like to think. Most of Wall Street in general, including the big investment banks who do a lot of the buying and selling of stocks, have absolutely no idea and are very slow to react to extremely bullish information. And I don't think some of the folks in the mainstream finance media like Jim Don't Even Rent Tesla Stock Cramer are helping the cause. Tesla's Q2 results were absolutely stunning, and some of the insights gained on the earnings call were extremely bullish for the company moving forward. We heard so many interesting pieces of information that paint a very clear picture of what the future looks like in the medium and short term for Tesla, and it's nothing but good news. Yet somehow, Tesla stock slides in the days following this stunning quarter with extremely bullish news about the future, and only a few days later does the stock market finally wake up and go, oh, actually, that was a pretty damn good quarter, and wow, that was some really bullish things they said about the future. Let's buy some Tesla stock. It's as if Wall Street, the mainstream finance media, and most stock analysts, and yes, there's a few exceptions, but most stock analysts, especially when it comes to Tesla, live on another planet and don't see the things that we see. It's kind of crazy. So in this video, we're going to watch Jim Cramer reacting in the wake of Tesla's earnings, and also hear from one of the few competent analysts covering Tesla stock who vehemently disagrees with Jim Cramer's take. So with that said, let's get into the video. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it.
We're just talking about the Tesla call with Andrew. You said it was going to be key to the print.
Well, I mean, in the end, targets were raised. People liked it. They're making a lot of cars would have made, and I think this is kind of the takeaway, would have been able to sell a lot more cars had they had more availability. And there are people who are going to say that, well, wait a second, is demand as strong as he says? And I trust him. I trust him when he says that, look, had there not been a chip shortage, he would have blown away the numbers.
So far, so good. Jim Cramer acknowledging the fact that Tesla has more demand than they're currently able to meet amid the chip shortage. Good start.
David, what I didn't like about it is that's what all the car companies would have said. And I would have thought there was no wizardry to the quarter. Mm-hmm. No alchemy, but no wizardry.
Right. I mean, what the fuck does Cramer even mean here? There was no wizardry. Maybe what he's getting at is there was no really, really positive news, no big bullish surprises. But I mean, honestly, what planet is this guy on? Did he somehow overlook the massive automotive margin? Did he somehow overlook the massive operating margin? Did he somehow overlook the massive billion-dollar net profit? Despite the fact that the S and X programs were ramping, there was basically no sales of either of these vehicles, and yet still insane profit, insane operating margin. This is really, really bullish. This is huge, okay? And Cramer just like, oh, there was no wizardry, huh?
I wonder, Jim, and earlier on Squawk Box, about 6:45 this morning, there was an analyst very negative on the what he says, at least, is a slowdown in their ability to actually produce batteries. I mean, Musk did bring up the whole Baskin-Robbins comparison, saying, we have 36 flavors of batteries at this point. And there are those who say, well, that is going to, what he went on to say, the engineering drag coefficient is going to actually mean fewer batteries available, and therefore things are going to get delayed.
This is a complete misinterpretation of Elon's comments here. When Elon Musk was talking about an engineering drag coefficient due to having 36 flavors of batteries, he's not suggesting this is going to slow down Tesla's ability to produce battery cells or to obtain battery cells from their third-party suppliers. What he's suggesting is it is a waste of engineering resources to have all of these different batteries that they need to work with, integrate, thermally manage, etc. It's got nothing to do with supply or the speed with which they can produce vehicles, nothing at all to do with battery cell supply. This is simply a matter of engineering resources. Elon's point was, if we have lots of different batteries, it's a waste of engineering resources. Much better to simplify and streamline, so I've got less brain power going into all these different variations.
But a lot of what he was saying was, it's kind of funny, that manufacturing is difficult. Whether it be battery, whether it be semiconductors, there's a lot of moving parts. And again, Carl, when I want to listen, I want Elon Musk to tell me, you know what to pick up. I've got orders be out, and it's going to come in December, and you're going to just love it. Berlin, let me tell you what's going on in Germany. China, I don't know what all the talk about is of a slowdown. I mean, none of that. Instead, it was like, hey, we got a semiconductor shortage, and it's going to be difficult. And then he had the contempt for the analysts and the love for the people who are the power to the people call. You know, David, he likes to do that with, let's have some fanboys in, and the fanboys ask questions. And my takeaway was, okay, it's hard to build a car. All right, there you go.
This is incredible. I mean, honestly, Jim Cramer is a relatively smart guy. He'd do okay on an IQ test, but he is absolutely failing the Tesla IQ test. I don't even know where to begin. I mean, seriously, key takeaways: manufacturing is hard. Jim, did you not notice the $1 billion in net profit? The fact that Elon Musk says Tesla is still on track to be producing limited quantities of Model Y from both the Berlin factory and the Austin factory this year in 2021. This was literally said on the call as well. The fact that Tesla is planning to increase their battery cell supply year over year by more than 100% from their third-party suppliers. The fact that there is absolutely insane demand for Powerwall and Megapack. The fact that Tesla was able to source almost 24 different chips to keep production flowing and have their brilliant software engineers write new firmware for this in a matter of weeks. Like, did this guy even listen to the earnings call? I'm just messing with you guys. Jim Cramer obviously listened to the earnings call. He just didn't know what the he heard. You know what? I have a feeling that I kind of prophesized exactly what would happen on CNBC in the wake of Tesla's earnings call in my own video.
Incredibly intense effort of finding new chips, writing new firmware, integrating with the vehicle, and testing in order to maintain production.
This is an incredible insight, one of the most important moments on the entire earnings call, and I'm sure you're not going to hear about this on CNBC tomorrow. I mean, gosh, how on earth could I possibly have predicted ahead of time that some of the key insights from Tesla's earnings call around the insane demand for their products, their vehicles, their Powerwall, their Megapack, their agility, their software prowess, their ability to adapt and change, to find new chips and then write firmware for them in a matter of weeks, how on earth could I possibly have known that all of these key critical pieces of the puzzle would be totally missed by the mainstream finance media? I'm so lucky.
Well, instead, Jim, instead of the things you were hoping to hear, he talked about chips. But I think the more interesting soundbite is the one about Apple, not necessarily calling the company out by name, but referring to their overall business model and his personal view of it. This is what he said.
Our goal is to support the advent of sustainable energy. It is not to create a walled garden and use that to bludgeon our competitors, which is sometimes used by some companies.
He's hilarious. A little Apple joke. Well, I think there's going to be an Apple joke on him later tonight when there seems like a company knows how to make a lot of money. Now, Tesla did make a lot of money, but the walled garden, anyone can use the charging station. Again, I come back to the idea that you never want Tesla to be another car company, because then the magic is lost.
Right. But I wonder if he does see Apple, though, as an eventual competitor. I mean, when you walk into a car these days, the operating system and what you've got in front of you is as important as anything, and the ease of use. And that's only going to grow as we get closer to full automation,
right?
Where really, what is it about the car that you care about, or what distinguishes it?
Well, look, you're right.
And you do wonder whether Apple eventually will finally make that move as it becomes closer and closer to really just a user experience with technology.
Well, you know, the king of Intel is talking about doing amazing things with Mobileye.
The king of Intel?
King of Intel.
Is that what you call him?
Well, I don't think he's the CEO. Pat Gelsinger?
Yes.
He's the king.
Oh, he's the king.
He's the king.
I didn't know that.
But he's only king of Intel. He's not king of chips. Not yet.
You guys notice what's happened here? Jim Cramer's gone from saying there was no wizardry, where were the key insights, where was the update on Berlin and Austin? By the way, Jim, as I mentioned, there were updates on Berlin and Austin. Elon Musk confirming that Tesla expects to have production in limited quantities from both of these factories in 2021. But of course, Jim totally misses this. And now they've pivoted to discussing what they see as useful and important. Really, it's just to stir up some controversy and keep those eyeballs attracted for the advertising dollars. About Elon's comments around Apple, totally missing the key important takeaways from the earnings call, just totally overlooking this. Let's talk about Elon's comments about Apple, ho ho ho. Is it any wonder that investors that rely on the mainstream finance media have no idea what the fuck's going on?
Now, I like Pat. I like to have a little fun with him, but in the end, Mobileye might be real. Because he's promising me we're going to drive around New York driverless. So maybe he's ahead of Musk.
You know what? I'm not even going to go there. Sure, Jim. Yep. Maybe they are. Maybe they are ahead of Tesla. Maybe that's possible.
Maybe Jim Farley, related to Chris Farley, late comedian, maybe Jim Farley's ahead of Musk when it comes to the Mustang E.
Jim, get the fuck out of here. I mean, seriously, dude, like the fact that he's even questioning whether or not the Marquis might be... You know what? I'm going to throw over to my good friend Sandy Munro for a second to drive this point home. What a ridiculous thing to even consider.
If you look at the back, because this is a heat pump system, the lines run in an exact straight line. When comparing and contrasting to the Ford Mustang Mach-E, you'll notice that the lines are not nearly as concise. So Ben, do you want to go ahead and grab the first component to compare and we can talk through the differences?
All right, well first we're going to grab all the lines that the Mach-E has, which is, as you can see, a whole bunch of lines when compared to what the Tesla Model Y had. There's actually 35 different hoses here, which is a very large number when looking at the thermal system.
Look at the weight just in the fluid. Just in the fluid. You aren't going to get range if you can't get rid of weight. And I need efficiency when it comes to wiring and plumbing. This is where things start to fall apart on the Mach-E. But bear in mind, this is the second best product that we've looked at. That's ponderous, isn't it? This is better than everything else that we've seen apart from Tesla. This is better than everybody else.
Now look, as I've said, Jim's a fairly smart guy, but he's living on another fucking planet. The fact that he doesn't even know what he needs to know before asking these kind of questions. If he understood engineering, if he even looked into this for a millisecond, he'd realize Tesla is light years ahead of where Ford is with the Mach-E. If he compared the range, but let's move on.
When it comes to the Lightning F-150, F-150 David being the greatest selling pickup has got a thing in the back.
So you think the population of would-be competitors is broader than European luxury OEM?
Exactly. And I looked at the Lucid again. You know, maybe pick up a Lucid. Fisker.
So it appears, if I'm not mistaken, that Jim Cramer genuinely thinks it's a possibility that Mobileye may be ahead of Tesla in terms of autonomy, that Ford may be a legitimate competitor with their electric vehicles, that Lucid has a shot at competing with Tesla, and so does Fisker. I'm not even going to say anything. I honestly don't need to. So, after Jim Cramer's, shall we say, interesting take on Tesla's Q2 earnings and their lack of wizardry, let's hear from an analyst who I personally believe actually understands Tesla better than most on Wall Street, and in fact most retail investors and pretty much everyone in the mainstream finance media. We are, of course, talking about the one and only, ranked 7,342 out of 7,660. Every time I did it again. I'm so sorry, guys. Wrong profile, my mistake. There we are. Colin Rusch of Oppenheimer, ranked number 17 out of 7,616 analysts on tipranks.com, with an average return over the past year of 63.4%. Not bad. Colin currently has a $1,080 price target on Tesla stock, suggesting 52% upside from where we are today. And just for contrast, the class clown currently with a $67 price target on Tesla stock, expecting 90% downside from where we are today. Oh, and while we're at it, just for good measure, because it is really important to understand who you're listening to, whose comments are coming from where, what they've said in the past, what their track record is like, etc.
But after it comes public, listen, Tesla's a sell. You don't want to own this stock. You don't want to lease it. Heck, you shouldn't even rent the darn thing.
Our colleague Jim Cramer's take was that really the call was interesting in that it was less about the promise of the future, as past calls have been, and more about the tough realities of the present. Has that taken the shine off the response?
I actually disagree with that take.
Fancy that. The guy with a fantastic, phenomenal track record, not only on Tesla stock, but other stocks as well, disagrees with Jim Cramer's take on the Tesla earnings call. Gosh, I'm so shocked.
And I thought what I heard on that call last night was really forward-looking in terms of looking at the subscription model for the full self-driving as well as the insurance opportunity. I think the real story here is around the recurring revenue model that's emerging for this company and how quickly that can grow and what people are going to pay for that. So that was our big takeaway. I mean, certainly there's a lot going on in terms of execution right now, but I think that's less of a concern for the stock here.
So where does that lead you to your rating and your target?
Yeah, we're actually still very bullish on this company in terms of its learning cycles. As a technology company that's really innovating and disrupting within the transportation sector. And so we're still at outperform in a $1,080 price target. And I think what's going to happen here over the next 2 quarters, maybe 3 quarters, is that the Berlin and the Austin factories are going to start to produce vehicles. We're going to start to see the gross margin impact, and we think there's 500 to 800 basis points of cost improvement that can come from those facilities, really impacting short-term numbers. And we're going to see the introduction of the full self-driving subscription and insurance start to pick up steam and really drive some of the earning growth at what expectations are.
Does all of the attention on regulatory pressure out of China, does this weigh on the name? How are you folding that in?
Yeah, we've got pretty modest expectations for the domestic sales out of that Shanghai facility. We started talking to exports from China to other geographies. I think that continues to be a trend that we see here. The company's also talked about, or they haven't necessarily talked about it, but the reports of potential additional capacity in India. I think certainly some of the fumbles around the brand here this year and the customer service aren't helping Tesla, and there's a real push for domestic China-based companies to serve the domestic market. So we see it as an area where they're getting supply chain leverage and some manufacturing leverage, but not necessarily the real growth driver, which I think really is going to come from both Europe and North America for this company, especially if they introduce some of the advanced features around driving and autonomy.
So Colin Rusch there, rightly pointing out that Tesla's business model is transforming into a high-margin, software revenue-based business, expecting to see 50% upside on Tesla stock over the next 12 months with a $180 price target. Meanwhile, Jim Cramer didn't see enough wizardry on Tesla's earnings call. Now, I don't know about you guys, but I kind of get the feeling that Jim, Markey might be competition for Tesla. Cramer may have some clouded judgment given the fact that, as far as I'm aware, maybe I'm wrong, do your own homework, blah, 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 I believe that his foundation has a very large position in Ford stock, who happen to make the Marquee, just quietly. I guess the point of this video is that 2 people can see the exact same thing, the exact same information, the exact same earnings call, and draw completely different conclusions. Kind of like when I see a woman that somebody says, man, she's so hot, look at those curves, and I go, dude, she's just fat. Moral of the story? Don't listen to the opinions of people in positions of authority, whether it's a talking head in the mainstream finance media, a Wall Street stock analyst, or some dickhead on YouTube, and assume that what they've said is the actual facts of the matter. Do your own interpretations of the data, draw your own conclusions, and you'll be a much better investor for it. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.